Alrighty, traders, what is up? Jamie Saettele here. It is June 3rd, 2021 with the FX Power Hour and a little bit of commodity action too, and maybe even some indices. Again, Jamie Saettele here. I am a Chief Technical Strategist for Scandinavian Capital Markets, as well as co-founder of B.S.B.A Trade Desk. And finally, getting some action today. Getting it in FX, right? The last couple of days have been really quiet. Generally speaking, it's been pretty quiet for a number of months, actually. But today's move, wondering if it's kind of the beginning of something bigger towards a dollar move. If you've been watching these videos and webinars for the last couple of weeks or even months, you know that we have been talking about and been consistent in this, talking about really action since the very beginning of the year, being kind of a consolidation bottom in the dollar generally, and even last week, last Friday. You're doing this. This is Thursday. I'm doing this a week early, but last Friday we talked about. I had this and talked about sentiment and kind of sentiment indications. And these articles that had come up as being an indication of a dollar low or the dollar about to rally, because essentially everyone hated the dollar, right? The demise of the dollar. This was from the Financial Times, right? Reserve currencies in the air of going big, essentially crapping on the dollar. And again, I said that there's not a whole lot in here that I disagree with, but the timing of articles like this don't come out right before the dollar falls on its face, right? These come out at certain times because that's when it's comfortable to publish them, right? And it's popular. And if it's popular, then by definition, it's probably crowded. So crowded trades have a way of reversing, and that's what we saw. And then, of course, we had this one, which is hysterical. Again, I don't think Bitcoin Magazine is a huge publication, but still, the fact that Bitcoin and the death of the dollar already evokes all kinds of images, and a dollar is on fire, a $100 bill, in fact. So, yeah, sentiment a bit skewed towards dollar bearishness, and only one way to correct that, and that is for the dollar to rally. All right, so we are getting a dollar rally, and I am really good at doing this. I always forget to share my screen. Okay, here we go. Hopefully we can see the screen now. Okay, so again, we talked about last week some of the sentiment that we had going on in the dollar, and here we go. Now that you can see it, Financial Times, the demise of the dollar, right? Okay, clearly a crowded trade. Bitcoin and the death of the dollar right here. Okay, dollar being called old death, and then a $100 bill on fire. Clearly indications of a low or a very negative sentiment, I should say, in the dollar. And the only way for that to correct is for the dollar to rally. Well, finally, we're getting that today, just about a week later. So what about the trades and the techs here? All right, let's take a look then at, we'll start with, I'll start with US dollar. So again, beginning of the year, viewing this all as a consolidation bottom. There is reason for that. Just look at where we're coming from. This is a weekly chart. US dollar, pretty darn big level, right? Here we are. Is bearish. People have been the dollar. We're trading at the same level that we were actually in mid-December. And yeah, there's a lot that could, if this is the beginning of a much larger downtrend, like lasting years and years, that's perfectly understandable. In fact, that's kind of where I lean. But there is a lot of room for a retrace, or let's call it a correction within from here to here or higher. And those are big moves in FX. All right, so honing in a little bit more, zooming in a little bit more. Pay attention to the center line of this pitchfork, right? This is a chart you should be familiar with if you've been watching these videos. We finally go to a 4-hour chart here. We finally have broken above this trend line from April 1st, in fact. And, this was last Friday. We tried to get going, got slammed back down. Tried to get going again yesterday, got slammed back down. And then today we finally appear to have gotten going. So again, within this consolidation bottom, as I'm calling it, it's been lasting, roughly half a year, 5 months, I guess. This is early January. We are into that 6 month. This right here, this move, today's move, I would call this a show of strength, right? That would be a Wyckoff show of strength. So we are getting to the first spot where you want to pay attention. This center line again. We've also got the high from May 13th, and that's about 11,770, 11,780 or so. So let's see what happens here over the next few days. Looking for a move above this level. All right. Again, and this is why you've got to be quick, or entries are critical, because look, holding a dollar bullish view for a while, right? It all happens in the course of like a couple hours. But I do think there's more to go on the upside, and maybe for a while. So you'll see that as we get into the various specific pairs. There's some questions coming in, something about gold. I will get to that when I get to gold, but keep those questions coming if you've got them. All right, DXY. Again, just like that other US dollar index, you can see the significant level that the market came down into in January, right? We came down and we've retested this level several times. This is the chart that I've been publishing. In fact, I posted it, I think it was yesterday, or maybe 2 days ago. Yeah, it was 2 days ago. But yeah, this was what we were looking at, right? Kind of a bottoming formation here. This is the quote-unquote neckline for that bottoming formation. Call it an inverse head and shoulders if you wish. And, at this point, 90-30 or so should be support for DXY. And we are looking higher in DXY. First clear level, or let's call it a good zone to look at. Call it 91.30 to 91.60. Right, that's pretty obvious here. You can see all those highs and lows that go back to February. So that's going to be a kind of what I call a magnet level. We'll look towards there in DXY. Okay, shifting our focus to Euro. Finally broken down. And again, this is that trend line that goes back to March 30th, very end of March. Just like in US dollar, we were looking at that trend line DXY as well. And in this case, the topping pattern, the former base of that pattern, is going to be 121.60, and that should be support as well. Okay, or sorry, I'm thinking DXY. That should be resistance now. So looking there for resistance if you do get a bounce at all over the next couple of sessions. But downside focus for me initially is going to be 1980s or so. You can see that right here, right? Got all those levels, beautiful. Okay, 1980s. Something else that I want to point out is the fact that the rally from that very late March low is exactly, subdivides exactly into 61.8%, right? Up here, pullback, okay? Then the rally from here to here is 61.8% of the rally from here to here. Why does that matter? Well, for one, it matters to identify resistance. Two, it matters because since this subdivides into two legs, it leaves it as a three-wave rally. So if we go back to the high that was on January 6th, that leaves three waves down. So we could label it as such, right? We could label this ABC, okay? And then we can label this ABC because this is now and 2 legs up. That means that if we deduce, or can deduce, excuse me, that there's probably either a triangle underway from the January high, in which case the market's going to do this for a while, right? A triangle would be something like this, right, to finish your triangle. Or we have a flat. A flat would mean that this is little a, or sorry, big A, big B, and then a flat is going to end somewhere down here, right? You're going to undercut that end of March low before moving higher. Now, again, this is going to take place over months or longer. So this is not something where it's going to happen tomorrow or the next week or even the next month. But it is nice to kind of start having an idea based on the information at hand of where we might be headed, bigger picture. Okay. Now, from a trading standpoint, you know, I'm not necessarily thinking about that stuff months out. I'm on the levels, so I'm at 2160 for resistance. You know, to look to sell some more or short some more, excuse me. And the next level I'm looking at on the downside, following those 1980s that I talked about before, is going to be, this is a daily chart. Let me go out a week to a weekly chart. So you see this black trend line here, right? Forget the blue ones. Look at the black ones right here. This is a channel. You can see the support way back in 2015 on that channel. The support here at the early days, at least in the US, of the pandemic. And we've broken above that level. That line right now, if I zoom in now to a daily chart, the top side of that line is going to be fairly close, you know, over the next, today's the 3rd. This would be June 10th, 11th or so. So, you know, a week out. If we do have a, you know, that would require quite a big drop. But that next level for me on an aggressive short-term basis is going to intersect with the trend line here. And that is about 118.50. Okay. So that's where my focus is following 119.80. So again, I got 121.60, 119.80, and then eventually 118.50 or so. And again, let me show you the channel here as well, from the, because I don't have it drawn in. Where was it? I don't have it drawn in on there. You miss these things by a day or so. Like I have it drawn in here. So let's just look at this one. All right. So here it's drawn in on this channel. You can see how just perfect it is. So you've got the rally from the low, you channel off your 2 original lows, extend from the high, that nails resistance all the way up. And the center line, which was former support, nailed resistance over the last couple of you know, highs in late May. These are charts that we've been looking at and I've been pointing out for weeks and weeks and weeks, right? Finally, we've rolled over. Your natural place to look eventually is this lower line, which again, 1850s over the next week or so. All right, so Euro pretty clear now in terms of a trading setup. Again, 120, 160 resistance, 1980s initial downside, 1850s next level. And again, this is on a swing basis. Looking further out, we could certainly, you know, drop further if we get that flat that I've been talking about. All right, moving on. Short-term British pounds, we actually got a short triggered here last night at 140, 195, and that was a very clean setup. In fact, we had this 5-wave move down, then we had a 618 retrace, bang right there, trigger while you're sleeping, and off to the races we go on the downside. So your clean level to look at on a near-term basis for cable is going to be like, call it 140 to 140.25 or so. Clean horizontal level here, short-term channel here. Okay. Bigger picture, tough to say. Again, I still think there are better ways to play dollar strength, and you can actually see that if you're looking at the quotes today, right? Like, let's pull up, here's FX. So you can see today, look at the big losers: Kiwi, Aussie, then Euro. Pound's actually down a fraction of that. So, this is more of a commodity currency story with Kiwi and Aussie, which we'll get into in here in just a minute. But yeah, the big level to pay attention to is the top side of this magenta line here. I'll go back to a weekly chart so you can see it. This is the 2007 to 2014 line, right? You can see what a beauty that 2009, 2017 line was, right here. Again, March 2020 low. Moving on, top side of that, depending on whether if you get there 38.80 or so. So that's kind of where I'm thinking I would want to pay attention or start to pay attention to cable again, but we'll see. Also, we had a pretty rare signal the other day. So here it is. This was on, I guess, Tuesday. And we got what I call a daily volume reversal. What that means, the conditions for the red and blue that you see on this chart are you had to have a significant amount of volume, okay, on the day, a certain threshold above the 20-day average of volume. You then had to have a key reversal, and it had to be at least a 1-year high or low. All right. You can see that we don't get a whole lot of these. This is going back, 5-6 years, and you can see the signals like buy signals here, right? Bearish signals back here in 2018, 2019, and then we had one on Tuesday. So, that could have certainly marked a much bigger top. We'll take the information as it comes along, but near term, we're looking at, like I said, this level here, which is going to be about 140, and then 138, sub 139, let's just call it 138.80 or so, and then we will see what happens from there. All right. Moving on. So let's take a peek now at, I guess we'll look at dollar yen. Dollar yen, if you pay attention to the dashed lines here, 2016 to 2020, right? 2016, 2018, tried to break above here. This was, again, early pandemic days. It did not, went right back down, and then tried to break out back just a couple months ago, did not. Now are we breaking out again? Is this off to the races for dollar yen? I don't know, but certainly worth considering. I mean, breaking out of a 5-year triangle at this point leaves a lot of room up there. So I don't know. Tough to say for me, to be honest with you. I don't have a super strong view. I do know that positioning on yen does support a big move higher in dollar yen. I think that there's a lot of people probably thinking the way that I've been thinking, that you're going to get dollar yen to roll over and yen crosses in general. So maybe that thinking is completely wrong. I don't know. As of right now, I'm not involved with anything here. But, if we start to get some decent short-term entries on the long side, then maybe, get in there and minimize risk and see if you can let it ride. As it is now, I'm just kind of sitting and watching. So we'll see. But of course, things show up, I will be posting, as I always do, the opportunities at hand. All right, moving on. Let's go to Aussie. Aussie finally. So I did note yesterday that we might get a push above 78, 10 or so, but obviously that's out the window. And you've got a big topping pattern, or a little topping pattern here within what looks like a big topping pattern. And I have some Elliott labels on here. Remember I talked about this with Euro, right, where we had 3 waves down and then 3 waves up. Well, now we might be into that big C wave. So this might be big A, little b, big C. You know where that goes. That goes right to 74.15 or so. And I will bring in this chart to highlight that. So we did look at this last week, but it bears looking at again. 2 legs down from the high here in February gets you 74.15. That's the high also from September 1st of 2020. That, by the way, is also the 23.6 retrace of the rally from March 2020. That also, by the way, is the lower channel line. If you were to draw a channel in from the February high, that puts us 240-minute chart, 4-hour chart. Let's look at that. You could get a little bit of a bounce around 76.40, which is more or less now. 76.90 should be resistance now. Okay, that is your neckline, so to speak. Okay, for this topping pattern that is now completed and confirmed. Okay, so that's where I'm looking for in Aussie. 74.15. And 76.90 should now provide resistance if we get a bounce of sorts. All right. Let's go to Kiwi, which is similar, of course, to Aussie. Okay, in terms of Kiwi, we've got 2 equal legs down from that February high at 67.95. That is also resistance from September of last year. And a little trend line break here. Underside of that line is going to be about 71.80, 71.90. That is now resistance. You might get a bounce near 71. It's just been a very well-defined level for months and months and months. And just highlight it here, but you can see all the stuff around 71, right? So it's kind of a sticky area, if you will. And if we did get a bounce from there, I'd be shorting or looking to short as close to that 71.90 level as I could. These levels, by the way, aside from just what I'm showing you on the chart, they also, they help. I get help from volume indicators that I like to use. So like high volume levels. So remember in Euro, for example, the level that we talked about as resistance was like 21.60, right? Well, not coincidentally, the high volume level from today, we had a new one here today, this morning. That's going to be right at 21.60 as well. So that kind of reinforces, the idea of that as a vested level of interest, we'll call it, which literally is the exact definition of a high volume level. All right. In terms of Aussie, we had a high volume level today as well, and that's going to be at 76.77. So what did I say? I said 76.90, close enough, right? 76.80, 76.90, good level for resistance. So let's see what we get, over the next day or so. If we get any bounces into those levels, great places to put on a high reward to risk situation in your favor. Okay. Let's go to dollar CAD. Here's a daily chart. Dollar CAD, about a month ago, actually took out that low from 2017, right? So at that point, we were trading at the lowest since May 2015, literally exactly 6 years. Excuse me, I need a sip of coffee. Exactly 6 years since the last time we had traded at that level. Well, we've put in some sort of a base here, it seems, and turning up today, right? Well, you've also got the line here from the June 2020 and September 2020 lows. Nice place to turn up. Trend line here that goes back to April 2020. That's going to be of interest eventually if we resume higher. And you can see that's 2360s. That's a nice horizontal level. Keep that in mind. But what I have here as well is a short-term double bottom, right? With this low and this low here, just from this week. Get through that level at 2144, and you have a set target or objective from this pattern at 2275, okay? Which, you know, lines up nicely too with this former support. So, you know, short-term target level 2275, you know, bigger picture swing basis kind of looking up towards the trend line that goes back, you know, over a year up to here. So that's, you know, stuff that you want to have drawn in on your charts as well. Okay. I think we're good on FX, but there's some really big things to show for commodities, notably copper today. Okay, so finally we're getting something in the copper, as far as a move to the downside, and we're testing a huge level here. Again, recall that this line back to 2001, right? We spiked above it. We put in a big reversal in May. This was from an all-time high. We've taken out that 2011 high, really big. Now let's go to the daily chart, okay? Look where we are. We are at the trend line that goes all the way back to March of 2020. So, you know, this is, like I say, when you have something like this, I did not draw this line. The market drew this line, right? Look at all the precise touches you have on that, okay? So if we can crack this support here, that indicates a very important behavior change in the market, and it would be lower for a while. At that point, I would be looking at volume weighted average price stuff to help identify some support and see where we might be headed. As of now, just know that we are at the level, make or break level here for copper, okay? All right, let's take a look at gold. This was the question that I had on gold. And again, if you have any questions, please let me know and I will get to them. But gold, after breaking, you know, through trend line, really channel resistance, because you can see here, if I throw that line on there, it's actually off of here, 15 degrees. There you go. So we broke above channel resistance. We are pulling back sharply today, obviously, as dollar strength takes over. The level that you probably want to pay attention to in gold is going to be like 1845, 1850. You've got the top side of that line here, okay? You've also got the 200-day average, right there. So 200-day average has been a pretty good pivot. Look back a couple of years. I mean, you know, it's a beauty. So yeah, look at that level, 1840, 1850 or so, as a decision point for the market. If you can hold down there, then sure, you know, maybe gold continues higher. If not, then you get a failed break, then it could get pretty ugly on the downside. So making no calls is with regards to what gold's going to do. I'm just saying that 1840, 1850 is my decision point for gold. And depending on what happens there, depends on what the decision will be, all right, whether it's higher or lower. So that's how I'm looking at the gold price. All right. Let's take a quick look at indices. Really the only index that I've been paying much attention to lately has been the NASDAQ. It's the only one that's had much of a pattern really to work with. So you have the trend line back to November of 2020, right? We held that several times in May. This is a count that we've been following, for a while, over a month probably, and it does appear to be playing out. Clearly, the high right here from this week, that's from Monday, is important. But 1, 2, 3, 4, 5 on the downside with an A, B, C correction, and that means that we are looking lower while against the high up here. I will also note from a seasonal perspective, June is historically the worst month, or one of the worst months of the year. Okay, June and September for equities, U.S. equities. I can't speak to other countries actually, but I know that June and September are historically pretty bad. In fact, there's that saying, sell in May, go away, blah, blah, blah. The more appropriate saying, at least from a statistical seasonality standpoint, is sell after May. Okay, so, because June tends to be, tough for the market. So just, throwing that in there, but, that does so-called fit with this Elliott wave count. So if we do start to roll over a bit more or follow through on the downside, the eventual level to pay attention to is probably going to be this trend line here, which is a line that just goes back off of highs from September and November of last year. And let's see, actually, if we were to drop in 2 legs. Yeah, so 12,624, which, by the way, lines up perfectly with that low from March. So that might be where we're going. Just something to keep in mind, right? All right. So that is that. Let's take a look at Bitcoin, because I know that there's some people that are going to want to look at Bitcoin, and there is a pattern to pay attention to right now. So again, we do have huge support from the trend line back to the March 2020 low. So we could get up and out of here and rally. Even if we do, I think we're probably in a period of range. I mentioned that just based on, experience and understanding, big trends tend to be followed by big ranges or periods of range, at least in terms of time. So, markets rarely go straight up and then straight down. Bitcoin, even on the way up, yeah, straight up, but even then we ranged and put in kind of a consolidation type top for many months until we rolled over. So, you can see that on display here in a mini kind of environment, right? We had a big drop, and since then, it's been 3 weeks or so, and we've been ranging. But this is a possibility from a wave standpoint. One wave, 1 down, 2 up, 3, and then you've got this contracting triangle here, which you can see I have labeled, right, in Elliott manner, if you will. And if that were to happen, then we roll over, or if this interpretation is correct, I should say, then we roll over and we head down towards the lower parallel, which, by the way, would intersect the long-standing kind of major support from the 2017 December high near 20,000. Okay, now in order for that to happen, at least is the way it's explained or shown here, you need to hold below 40,904. Okay, so you should know pretty soon, hopefully the next day or so, if this is correct or not. Okay, again, I don't have a dog in the fight here. My Bitcoin was sold back in February, what little I had left, and that's that, right? So even if we are, even if this is a bigger low, you're going to range for a while, and that doesn't mean breaking above here, fine, but I think you're going to range within a very wide, broad spectrum before the next major move is decided. All right. But it certainly is a wonderful level to work higher from if indeed that's going to happen, right? So we should know soon. Again, 4904 is the key spot. All right. One more thing that I wanted to talk about is we had some other interesting signals here. So, again, I run these signals notably on volume, on daily, weekly, and monthly basis, and I do trade off of them intraday as well. But we had in the month of May a monthly volume reversal in the ticker WOOD, WOOD. That is essentially lumber. It's an ETF that comprises a bunch of lumber companies, so companies that would have exposure to lumber. You know, you can kind of look at it and take it as signals for lumber futures even, okay? So you can see the signal. This is the current signal. The last two bear signals I'd say were pretty good, right? 2018, 2011, okay? We even had a buy signal here. So taking that, why do I care about lumber? Well, if you recall, one of the first commodities really to, you know, see inflation and in a very, very, you know, quick manner was lumber, right? Well, you know, if we're getting this, here's a lumber futures chart, right? Like this was March pandemic right here. Lumber went berserk immediately, and we ended up topping actually last month. So at a level, by the way, you know, this is a pitchfork here, upper parallel, you can see all that good stuff. So my point being is that getting that monthly reversal signal in wood, right, lumber, and having lumber reverse from resistance itself, you know, is an important signal potentially for the broader inflation narrative, right? Inflation might be here, right, for a very long time. Like if we've, you know, the whole script is flipped, the new narrative or the theme, secular trend is indeed inflation. That's fine, but you're going to have periods of months and months and months and longer, you know, where that's not going to be the case, especially from a trading standpoint, right? Where you're going to have a rising dollar and the inflation trade's not going to work, right? And really, that's, you know, the inflation trade really is a lower dollar, and everything else tends to be higher. So here, for example, is that wood. Remember I said that wood ETF and the New Zealand dollar, right? Pretty close. There's a reason for that too. I mean, one of the bigger exports from New Zealand is lumber. So yeah, I wanted to bring that into focus as well. That's an important piece of information that people should pay attention to. So yeah, that's one of the more important observations I think that I have made or noticed over the last week, or this week, I should say. All right. So that, my friends, is it for me. So again, some good opportunities out there to maybe get involved with this dollar trade, notably Euro, Aussie, and Kiwi. Maybe dollar CAD, but Euro, Aussie, and Kiwi seem to be the best of the bunch as far as their clean patterns are concerned, and you know, well-defined levels for near-term targets as well. Okay. All right. So again, Jamie Saettele here. You notice at the bottom of the screen as well that there is a link to sign up for Telegram. I'm posting to Telegram, so please check that out. Sign up. You can receive the updates when things are posted, and that link should be below at the bottom of your screen. Excuse me. All right. So again, that's it. Jamie Saettele here, signing off, and I hope everyone has a wonderful weekend, and good luck.